Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's bullish sentiment strengthened in the Wednesday session following a report that showed inflation rose at the slowest annual pace in 2 years, according to the latest data from the Bureau of Labour Statistics. It showed that the consumer inflation in the US, measured by the Consumer Price Index, or the CPI, increased by 0.4% in April, with core inflation, excluding food and energy prices, also was up around 0.4%. However, on a year-over-year basis, headline showed that the CPI ticked lower in April to 4.9, falling from 5% for the first time in accordance of 2 years, while the CPI core slowed down by 5.6% in March to 5.5 in April. This now sees the Fed funds rate at 5 to 5.25 is below the annual CPI. Looking ahead, eyes now look to Thursday's producer price report, or the PPI. Based on the technical outlook, we can see that the topside rejection around the 67.80 to 68 cents is somewhat struggling. There is bearish divergence as well, so it really depends now on how the market price movement is seen. As the pattern unfolds further in the current decline, would see a retreat from 68 cents and look back towards the bottom side around 67.5, and where the 60-day moving average is at 67 cents and reassess from there. The ADX is trending, however, to the bullish case, so that may give some merit towards a rise, but we really need to see further movement above 68.15 to get that next level of 68.55 and on towards the 70 cent target that was confirmed from the break of the 60-day moving average. The euro was a little bit weaker and whipsawed following the release of the US CPI data, with the weekly job claims now awaits and also the consumer sentiment data on Friday. Along with that, talks of the US debt ceiling gave little progress after President Joe Biden met with House Speaker Kevin McCarthy and other top congressional leaders to discuss the issue. Both sides are scheduled to meet on Friday. So given that the technical pattern is somewhat bearish and the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds relatively unchanged around 102.20 area, could see a further slide. And I call at present the 109 figure 25 awaits the challenge. If we see a break there, that would give further scope to the downside to 107. Any upside attempts remains limited, I feel, from the resistance of 109.90 and the key level, which has seen 2 engulfing candles, which means in terms of negative or bearish outside range days, around 110.60.75. The dollar yen, well, the market was a little bit weaker as the Japanese yen outperformed the US dollar and now looks towards the region somewhere around the level of 133.45.55 and a base still holding roughly just a touch low, I feel, around 132.60.65. I'm not abandoning the top side at present and therefore could see further gains or rejection, as we can recently seen over the past few weeks are close to that bottom side of 133. So therefore looks back eventually to the top side of 135 to 136. Well, Super Thursday is here and all eyes look towards the Bank of England's rate decision, which widely expects a rate hike of its official bank rate by 25 basis points to 4.5%, or we will get a surprise 50 basis point. That remains. So all eyes on the Bank of England later today. Finishing off with gold, well, the market took the challenge towards that top side 2038 and rejected, but still not backing away as such, but the technicals are weak. My view is still towards the downside and anywhere towards 1,994 to 2,978, with the top side limited around 2,000, as I mentioned, 2038. Wrapping up with oil, well, I've not abandoned that topside call, $74.1030 with any pullback limited, with the support seen at 72.45. Well, that's a wrap for the day. Thank you very much for joining me. As always, look out the intraday report, and I hope you do enjoy the rest of the day.